Wonderful.
All right.
Great. Can you see it?
Yeah, I can see it. Okay. So we're going to go ahead and get you started. Do you need anything from me before I let you go?
No, just let me know what time do I have till so I'll watch the clock.
Try and get it as close to the top of the hour as you can.
Okay, thank you so much, Jeff. Thanks everyone for being here. I can see the questions as we're going on in the room. If you have any questions, you can just ask me as you go along. And today, like Jeff said, I'm going to talk to you about gaps, but specifically, I'm going to talk to you about trading on the side of institutional money. My name is Melissa Armo, and I own my own company, the Stock Swoosh, which I started a very long time ago. Now it's really hard to believe. I did mortgages for 17 years and I wanted to change careers, and all of a sudden I started trading. And when I started trading, I did not know what I was doing. I had absolutely no clue. And then lo and behold, 3 years later, I developed my own system, which I now teach today. I also appear on TV. If you'd like more information, you can follow me on YouTube. All of my television hits I try to put on there as well. Tomorrow morning, actually, you could watch me. Charles Schwab has a channel. It's an online channel. A lot of people from Fox actually went over there. I will be on at 8:15 tomorrow morning if you want to watch me on Schwab. So if you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. I do talk to people on the phone. I am a live person. I live in New York City. And again, I am here doing my thing every single day. Today, we shorted Boeing. You can pull up the chart. Boeing gapped down today, and I also called puts, and it is falling as we speak. So I have in here the stats. This is not through today. This is through, though, the 4th. Our stats for the year so far, again, through November 4th, we're up $764,887 in the live trading room. This is with an average risk of about $3,500 per trade. These are all trades on margin. If you decide to come and learn my method, you will have an opportunity to trade live with me in the room. I call the trades in the room, and again, you can go to YouTube excuse me, and you can watch some of my trading room videos. I didn't put today's video up yet. But again, I trade live. I call the entry, the stop, the exit. You decide how much you want to risk. I also do options. We're going to talk about a few options trades. Again, we called a BA put today. That's going. But options I look at for longer holds, okay? So these are the stats, again, not through the last week. I haven't kept up with this, but I risk more in my options trades. You can risk the same, you can risk less. One of the reasons people like to do options is because you don't need a margin account. So up over 2.6 million for the year, again, not including the last week, which was a really big week. We actually did calls. We did calls in Tesla, the market, Amazon. Again, everyone knows the outcome of the election now, so the market has had a massive move. Basically broke out last week, the day after the election, started to rally before the election, and we capitalized on that. So again, not including the last few days, these are our stats year to date, options and day trades. If you want to do both with me, again, you can risk less, you can risk more, over 3 million for the year. So again, I talk to lots of people. Again, I've been teaching people since I started the business in 2012. People can be successful trading. I do my best to mentor people and help people, but at the end of the day, you will never be successful trading and never make any money at all if you don't know what to do. A lot of people say they have this strategy, this thing, look at this moving average, this Fibonacci. There's not one thing that's actually going to tell you exactly where something's going to go. And again, if you know where stock's going to go ahead of time, you can make money. It's a combination of things, which is what I teach people in my class, okay? And again, as we go along, any questions, just plop it in the chat. So 2024 is almost over. I can't even believe it. Less than 2 months, and it's going to be 2025. I think 2025 is really going to be a huge year too to trade. Again, are you ready? Are you ready for next year? While there's plenty of time left to make money between now and the end of the year, everyone should be prepping for 2025, okay? So when you look at it, you're like, okay, what am I going to do next year? How much am I going to make, okay? Someone is asking about a percentage of return. I told you the risk per trade, so you can go back and look at the stats. But as far as what I'm doing with my day trades, I'm looking for 1-to-1. If I risk 3,000, I'm trying to make 1,000. And same thing with options. Although we had some options trades that went completely insane, in the last week. So there's times where we do options trades that could be 400, 500%, but that is not every week. But usually I'm looking for 1-to-1, okay? Anyways, what I was saying was you have to know what to do. In order to become successful in the market, you have to become a specialist in one specific strategy, a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. So every trader in every level must learn this skill set, and it can be acquired through education. So it is about becoming an expert. You're here today, you're listening to me, you're listening to lots of people. I find that, again, when people start trading, it's so easy. They want to make money, they want to do everything, they think they know what to do, and then they start losing. Then it becomes harder as time goes on for people to take classes and invest in themselves and their own education because they're losing money in the market and they're trading and they don't know what to do. But that is exactly the time that you have to invest in your education and yourself. Sometimes the hardest part, really, in trading to get to the point of success is the end. It's like the New York City Marathon actually was just this past weekend, or 2 weekends ago. It's always the first Sunday in November. It was the 3rd, November 3rd. I watched the marathon. It's really something to see if you've never seen it. This marathon this year had more people participate than any other marathon in the history of the marathon. It was over 55,000 people. And it's 26.2 miles. The last mile is the hardest for people. If you finish, you get a medal. If you don't finish, you don't get a medal. If you stop 1 mile, 200 yards from the finish line, you will not get a medal. If you finish, even if you're walking it over the finish line, you could take 10 hours to get over, and some people did. I saw some people crossing the finish line at 9 o'clock at night on that Sunday. You finish, you get a medal. It's the same way with trading. You're never gonna become successful if you don't give it your all. You may have lost money trading for the last 5 years or 10 years or 25 years or older than I'm alive. If you don't ever make it, nothing that you did before will matter. No losses, no investment that you put in any classes. If you don't get to the point where you finish, nothing matters. And I found that a lot of people, and I talk to people, because like I said, I've had the business now for 13 years. A lot of people get halfway or even a little bit more than halfway, and they just can't get themselves to the next point because they've been losing money trading. They paid for classes and not gotten the benefit out of it to learn how to trade. And they just can't, even if they have the money, get themselves to invest in learning something new. And yet they trade every day and they keep losing. And they're going to keep losing forever, because they're not there yet. They're not over the finish line. You know what I'm saying? So how can you earn a living trading? Number one, you need a winning strategy, okay? Number two, you need a supportive mentor. That's me. You follow me. You do. You listen in the room. Again, we shorted BA. Number three, become an expert in one thing. So implement the strategy, get good, and then you add size to win. Again, whether you're risking, $100 or taking one contract shouldn't matter. You should be up. You should be up. You should be positive. You should be green, green, green. So again, how do you make money in the market? You think about it. Determine who is in control, okay? The bulls or the bears. Who is in control of the market right now? Guess what? The bulls. I don't care that the market open lower today. I don't care if the market's red right now. There's one control going on right now in this market, and it's the bulls, okay? So again, no one should be short this market. Even if you were short, you shorted this morning, you're up now, it's a bad trade, okay? So the fact is that if you're on the right side of control, you're going to profit. If you're on the wrong side, then you're going to lose. And again, obviously you want to make money in as many trades as you can. Nothing's 100%. You can go back and look at my stats. That's why I included them here. I have some trades that lose. We're going to go over 2 weeks worth of trades for the last 2 weeks, but you have to have more winners and losers and a lot more, okay? So you have to get the direction right to win. If you get the direction wrong, you lose. I know this sounds so simplistic, but it is 100% true. So this is only back here from last week. This is Amazon. I don't have an updated chart in here. But this took off. This took off even here from this day and here from the 6th. Amazon rallied, pushed up, ran up over 210, went bonkers, okay? The only way to have made money in this was to be long. And we did calls in this. You could have gone long this. You could have done calls. Here's another one, the QQQs. Again, we were talking about it This is from last week. Look, this is all the way up here. You can't even see where this is now. It's all the way up here. Crazy. The market made brand new all-time highs, 1/500. So this was the day after the day before the election. And then this is now. Like, again, if I had a current chart in here, we're all the way up there. So you would have wanted to be long. Okay? And again, here's another great one. Now, this was a short. IBM, again, I'm going back a couple of weeks here. We did this trade. We did puts and we shorted it. We did day trades. You would have wanted to be short. That's the only way you would have made money in this. Okay? So, again, it's about momentum, momentum, momentum. This was AMD. Stock closed here, gap down, fell. Boom. Again, this was the end of October, the beginning of November. You would have wanted to be short AMD. It was the only way to make money. So again, number one, you need a winning strategy. Otherwise, you won't be successful. Buying support, short of resistance, getting on a moving average, that's not a strategy. Buying pullbacks is not a strategy. Contrary to what people think, it is not. If it was that easy to trade, no one ever lose. I mean, seriously, think about it. So you need a strategy. Mine is golden gap. So let's just talk about what is a gap. A stock gap, so the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Okay, so what is a gap? Let's take a look at it here. This is the SPY. Again, beautiful chart. There are gap downs and there are gap ups. So here is the SPY. SPY closed here, gap down, open, fell. Again, I'm going all the way back to Halloween. You could have shorted the market here. What happened then here? Market closed here, gapped up. This was the 5th, this was the 6th, this was the morning of the election. We went long, we did calls, boom, ran up, touched 600 yesterday in the SPY. Again, I don't have the current chart in here. So there are bullish gaps and there are bearish gaps. But a gap is the difference between the close and the open. Here's the AMD again, stock closed here, gap down, closed up here, snug as a bug at 4 o'clock one night, gap down here in the morning, open at 9:30, fell off a planet. Again, whether you do puts or whether you shorted this was under 155. And look at the move. Again, came all the way down to 140. This is a big move. Again, what do? I make money trading momentum. So how am I getting these kind of totals, these kind of returns? Momentum, momentum, momentum. We're not scalping. I'm not doing low float stocks. I'm not doing cheap stocks. I'm not doing stocks that don't have any volume. Traders, institutional money, big traders, hedge funds that trade the market. And again, they're in control of the overall market. They're in control of stocks, okay? They move stocks, okay? And you can short stocks and you can go long stocks, all right? So again, my winning strategy is golden gaps. This is what I do, how I trade. It's the system I invented. I teach a class once a month. There's only 2 more classes left before the end of the year, one in November and one in December. But this is the whole meat and potatoes of what I do. I haven't done anything else since I figured out my system. I've been trading now for almost 17 years. That is really crazy when I think about it. I'm now trading as long as I did mortgages my previous career. I guess that's something to celebrate. So a golden gap is a gap that rates 20 points or more per. The golden gap 26-point rating system. You can take the trade in the direction of the gap. You can do the trade as a day trade or an option. You need a focus though. And my focus is gaps. And I specifically focus on shorting, which may sound crazy. Again, we did BA today. I mean, I'll go long. We did calls. We went long the last couple of days. I will go long, but I prefer to short. The biggest short that we had though in the last month was IBM. Literally, we got this whole move. We got the whole thing all the way down. You could even have shorted IBM today. Again, what is a gap? The stock closes here, gaps down, opens, drops. Boom. Do. Again, you could have done multiple strikes in this. And if you have a retirement account, you can buy puts. You can't short, but you could do options. Here was another one we did. What is a gap? Microsoft. Closed here, gap down. Closed up here, snug as a bug. One day at 4 o'clock, gap down here in the morning, open, fell. That was the 31st. That was earnings. Feels like a long time ago when you think about it, really. But that was just like 2 weeks ago. So how do I figure it out? I rate gaps using a 26-point checklist. I get up in the morning, go through the rating system every single solitary day. If I don't find anything that rates per my method, then I don't trade. I'm always looking to determine who is in control. And how do I do that? The points. The points tell me who is in control. The rating system helps me determine who is in control. One of the craziest things about what's happening right now, today, yesterday, even in the market, is that people think the market's extended. And day traders are going to come in to trade the market shorted as a gap fill or wait for a pullback or whatever crazy things that people do. Institutional money hedge funds don't think like that. They absolutely don't. And they're in the money for the long haul too, okay? So again, this control piece of it is what I'm talking about when I'm talking about institutional money. That's the type of money you want to be on the back of, and all you have to do is just take the trade and poof, it's there. I called 255 calls in Tesla in the last 2 weeks and 280 calls in Tesla. All you have to do is look at the chart and see where Tesla is. They were bonkers trades. They were bonkers. They were like the biggest trades I've called for the last, I don't even know how long. Like absolute bonkers. Like you could have gotten out of the Tesla calls yesterday, I don't know where it's at right now, at like 75 for a sell price. And I think I paid 12 or 13 for it, for the call, which like one contract would have cost you like $12 or $1,300. But to sell it at like over 70 is insane. So again, that type of move is created and made and sustained and carried through. To see that type of momentum, it was buying with institutional money, okay? And everybody wants to trade because they want to get rich. Well, you know what? You're not going to get rich if you don't know what to do. You're not going to make any money. So that's the caveat. Everyone starts trading. They want to get wealthy. They want to make a lot of money. They want to work from home. They want to get rich. It's like, it's black or white, unfortunately, meaning you can't like half-ass it and expect to just make a little bit of money and not get rich. You will just lose or get nowhere. And you will waste years of your life, okay? And you don't want to do that. Life's too short. It's almost 2025. I mean, look at how fast time has... The election's over. I felt like we talked about it all year, and then poof, it was here. I mean, it's really... Time is just going so fast. So the rating system helps me determine who is in control, and that's very important. Now let's talk again about gaps. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps. And some gaps are very powerful displays of institutional money. The most important gaps of the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. So that is how you know when the power of money will flow to pay you. So again, it's about reading the footprints of institutional money, which is extremely important because if you don't have that help of the selling and the buying to push your trade, and again, institutions short, hedge funds short, then it's going to be tough for you to make money because all you have is the retail volume and it's just not enough. So if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader, and you can win big trading on this side of power, and people are with me. I mean, one of the trades, like I said, was just Tesla, but there's others. So again, what do I mean by institutional money, BA? Again, you could have done many different things in this. I'm just going to show you this today. Again, I don't have the current chart in here, but this sold off here on the 5th, okay? And again, here's where we are today. We broke 145 today. We're down here at 144. So again, what's happening to this? You say, well, why? Because of this news, that news. The stock got dumped. It got dumped. And again, this is another one here. Closed here, gap down, fell, boom. So again, if a stock is at 220, 221, and in a week it's at $20 lower, how do you think that happens? It's not retail traders, okay? It is sellers, institutional sellers, pushing the stock down, okay? So again, becoming successful requires you becoming a specialist, an expert. An expert. Again, I go on TV. Why? Because they want to know my opinion about stocks in the market as an expert. If you were wanting to become a doctor, you go to school, you go to medical school for 12, 13, 14 years, you do residency, you're an expert. You want to be an accountant, you want to go and get your CPA's license, you're an expert, okay? People go to you for advice. Trading is no different. You must become an expert to succeed. There's so much money and so many people out there that want to grab the profits. If you're not an expert, you're not going to make anything. You will lose. So for me, it's about chart analysis, technical analysis. It's just like we were talking about with the charts. It means reading the price action and reading it in live time. So comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. And again, you could trade the market, you could trade specific stocks. When I say the market, I mean the QQQs or the SPY ETFs. Now let's look at one we did here. This seems like a long time ago, but we did NVIDIA calls. Oh gosh, 125. It is a long time ago because the stocks flew over 140, 145. But we did way back in October. We went long NVIDIA. So I'll send the trade out. Could be before the open, could be right at the open. This was 9:46. This was NVIDIA calls. It was $2.50 for one contract. That's cheap. That's cheap for the way this stock moves. Again, so I was asking about percentage of return. This was a 260% return on investment trade. This one here was a nice trade. You could have bought it at 250, sold it at 9. Let's take a look at the chart here. This was back on the 3rd. Here. And again, I'm usually doing the weeklies. So I get the move, boom, out. So again, this got bought. Again, here's what happened in the last week with this. This got bought. This is over this number already here too. That was last week. So again, NVIDIA's getting bought. This was, oh, I did put this in here. Here's the Tesla. You could have, I did not hold this to the last day, which was Friday. I don't even know what it was worth. I didn't even go back. I don't even know. But I got out of it when we had the move then with the election. 255 calls. It was 334%. If you held this trade till Friday, it flew over 300. I guarantee you that was 700%. Let's look at the chart. I don't know if I have this one. Here, yeah. There was Friday, the 8th. Look at that. So I thought this was a good exit on the pop because we got in the trade and then it was up crazy birds the day after. But look what if you held it. I did not hold that trade till that last day. I mean, it really doesn't make sense to always do that. But look at that. That was crazy. So that was a ridiculous trade. And I didn't hold it into the last day, but it was a ridiculous trade anyways. So if you had 2 contracts of this, you could have made over $5,000 without even holding it into the last day. The momentum of the gap carried it. You understand, people? The momentum of you don't have to do anything, but use your brain. You analyze it and you rate it. And this is what I do. I use my brain. Okay. Then I size myself correctly, and then I don't have to think. And I just let the momentum take it. And again, I had sent out an email last week. It was after the election on the 6th. I said, let everything rip. That was my 2 cents to everybody, and that's what happened. You just let it rip. But again, it's very, very interesting because I can see what's happening here with some of these charts. We talked about the market earlier, this one here too, from yesterday. Again, a lot of people didn't capture the move or didn't hold it or trying to do the opposite, and they're going to get burned. They're going to get burned. It's so easy when you're trading on the side of institutional money. And if you're not, it's so easy to lose. So again, you need conviction to make money, and you get that from understanding why. As much as people say, well, I don't really need to learn it, I'll just take your trades. No, if you learn it and understand why, you're going to be able to risk more money, you're going to be able to hold trades like Tesla, you're going to be able to earn more money, make more money, and you're going to be able to survive long after I'm even doing this or teaching the class or even running the room. People have an innate just desire, okay, to understand why. They want to understand why. Why did this happen? Why did that happen? Look at what happened with the election. You still have all these pundits on TV. Again, I'm not a political person on television. The Democrats are asking themselves, why did we lose? Why? They'll be talking about it till the end of the year. People want to know why. Okay, it helps them get through. If you understand why a trade is going to go up or a trade is going to go down, you will make more money and you will trade better, or you will hold something even if it's down until it turns up. So again, I use a 26-point checklist. This is what helps me decide. And when you think about it intellectually, you're like, oh my God, I totally get it. It makes sense that if you're in the control direction that you can make money. And it makes sense if you're against a direction that you would lose. It totally makes sense. It makes sense that you have to be on the side of hedge funds instead of retail traders. Retail traders get it wrong most of the time. That's why most retail traders lose. You don't want to follow retail traders. As much as it's nice to be friends with people, many of them are losing. Okay, and that's not where you want to be. You want to put yourself ahead of the game. You want to be ahead of the game. And again, gaps are a very, very specific way to trade. And again, this is what I focus on. This is my expertise. So gaps are the most powerful show of price action in a chart. Gaps have large moves. I showed you some of these. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. And when I trade, I'm looking for and trading momentum. Then whether you have a small size or a big size, you get a good risk reward. That should not matter what your risk is, because you have to be within your own account size limitations. Now, again, we had the rate drop last week. Was it expected? Yes. Did the market have a move? Not really. The market moved because of the election. Okay. So again, only if the Fed would have done something absolutely bizarre would they have done something to create a sell-off then after the fact. The Fed, I think the weight of the Fed will have less of an effect going into 2025 than it has for the last 2 years, which quite frankly has been far too great on the market and everything else. Whether they drop rates or hold rates steady, or whether they move them up again, the Fed, the weight of the Fed, I think, has been lifted off the market going into a different administration. And again, I don't make decisions based on fundamentals to begin with. I make decisions based on the chart, and you should too. And many of these things are already baked in anyway. Same thing with earnings. We don't know the outcome of earnings that happen beforehand. We're not privy to that information. We don't know what their earnings are going to be for Tesla or this thing or anything else until they happen. But you can look at the chart. You can see the gap when it happens. Okay? So a big flow of money going a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. Any questions here as I'm going along? The last question I saw was Pamela. We doing okay? So when you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of power in order for you to make money trading. Institutional money is in charge of the market and stocks at all time. Even if you think it's not, it is. Okay? And that's my point, as what I was talking about the market. Now, so that was one. Number two, you need a supportive mentor, do and follow. So I trade and run the room at the same time. And I talk very fast, but people can follow me in the room, and we're usually doing one thing at a time. Like today we shorted BA. It's not that hard to follow me. The idea of being in the room is you did the class, you understand what to do, and you do it ahead of time, and you get in the room, and you rated the gap, and then you're ready to go, and you like BA, and I like BA, and then I make it easier for you. And then, of course, you can ask me questions after the fact. So I'm just going to show you 2 weeks of stats here. For the last 2 weeks, 31,870. Again, this is an advanced trader risk, but we had an 88% win ratio. Okay, I could have put the whole month of October in here. You can go back again and look at the stats I have earlier at the start of the webinar. We did BA on the 28th. I was off on the 29th. I had an event in New York I went to. My assistant did the room. AMD won on the 30th, Microsoft won on the 31st, and Amazon we did on the 1st. We had no losers that week. Then the 4th, we didn't do any trades. We did Amazon the 5th. We had a stop in Tesla the 6th. Then we did NVIDIA. That was a big trade. That was the day after the election. That was a long. We did NVIDIA the 7th, and I was off on the 8th. So this is 2 weeks in the room with me up through Friday. And Monday we were closed for Veterans Day, and today we did BA. So again, just looking at every single gap, okay, this was 1028. Stock closed here, gap down, open, rallied, dropped. Shorted BA, and it worked. Again, you could do a put and get out of the put if you don't want to do a day trade on margin. These are all day trades on margin, but that's what I do. Oh, no, not 10.7. I'm sorry, I didn't fix that. That was 10.29. I was off. 10.29, I was off. Then 10.30. I did an AMD here. Stock closed here, gap down, open, dropped. Was a short. Again, you could have shorted as a day trade, could have done a put. Trade worked. Again, who's in control? Who's in control of AMD? The bears. The bears. Then we did Microsoft. Again, this was the 31st. Stock closed here, gap down, fell. Who was controlling Microsoft? The bears. We shorted it. It was a good trade. Then we did Amazon on the 1st. It was here. Stock closed here, gap down, boom. Then it gapped up and rallied. And again, as crazy as that may seem, we actually went long Amazon there. Again, we had a long in here. This tail moved up higher first, got out, dropped. And then this broke out. Then we did no trades on Monday. Then we did Amazon again on the 5th. Then we did Tesla We did Tesla here. Oh, this was the day that we did it after the election. So I got stopped in this. Here, but it did go on to work. I took the stop, I took the loss, and then I stayed with the NVIDIA, which was here. Broke out. So again, NVIDIA was a beautiful rally, like many things. Strong stock anyways, okay? And again, I don't even know if it's at 150 now, but that's where it's going. Someone tell me the price of NVIDIA. It's going to 150 if it's not there now. And then we did NVIDIA again. Boop. Went up again. And then I was off in the 8th. So again, here's 2 weeks in the room. 2 weeks in the room again. We do it. We're done. The room opens at 9. We start trading between 9:30, whenever we get the setup. And we're usually done by 10:15. Some days we're done by 9:45. Again, these are all trades you would have needed a margin account to do. If you don't have a margin account, you could do a put or a call. Any questions on anything I just said? How's everybody doing? Hello, is anyone there? Hello, traders. Any questions? I know there's people there. I can see them. I don't want to talk too fast. All right, I'm going to keep going. So anyways, if you chunk it out, if you chunk it, you can get to your goals, okay? So for a lot of people, they are just trading all day long, giving back money, okay, which is not productive at all, and thinking, well, because they, made money in the morning, they're just going to make more if they trade. But that's not the case. It's like trying to hit a bullseye. If you're throwing 10 darts at a board, the chances of you hitting a bullseye 10 times in a row are a lot less. So if you hit the bullseye, you're done. Do you know what I'm saying? It's a heck of a lot better to just do it, make your goal for the day, and shut it down. And one of the reasons I, do shut the room down is because when I did figure out my system and then I was trading and I was successful making money, I would give it back in the afternoon. I nipped that in the bud and I stopped it. And the way to get the bigger moves and to make more is to, guess what? To do options. You do options, and that is something then you can do to capture those overnight moves. Someone's asking another question here. What was the average amount you put into each trade? For the day trades, I'm risking around $3,000 to $3,500 per trade. I do use stops or limit order stops. If I get stopped out, I lose. For the options, I'm risking around $8,000 per trade. You will set your risk based on the size of your account. Options are cash risk. Day trades are in margin. So you have to have a margin account to do that. You got to have 4-to-1 margin at some place like Schwab, for example, or other places you can go. Or if you go prop, you can open up a prop account with less than $25,000, and then you need 10-to-1, and you'll get 10-to-1 margin. You could open up a prop account with $5,000 and get 10-to-1 margin, which would be $50,000. Again, there are different ways to trade. Or you open up a cash account with options. It's $2,000 minimum. You can open that up anywhere. And again, your amount that you risk is all you can lose. So I don't use a stop. So if I'm risking $1,000, that's all you can lose. That's it. You hold it overnight. If it goes bust on a Friday, it goes bust. Someone's asking another question. Do you shut it down even if you take a large loss? You can go back and look at the stops. I really don't have any large losses this year. We've been doing extremely good in the room this year. This is probably the best room I've ever, 2024 is probably the best year I've ever had in the trading room. Win ratio, money, wins, the whole thing. I mean, there are people that are following me since I started the business in 2012. I should send that out in a marketing email. 2024 is the best year that I have ever had day trading. So I don't think I've had any big losses in the room this year, but I have had some losses and some bigger than I wanted to if I moved the stop, for example. But if you're asking me, like if I had shorted BA today and if I had taken the stop in BA, would I have taken another trade? Yes. So if I take a stop in something, I will do a second trade, but there is no large loss. If I move the stop, I might give it 10, 15, 25 more cents, but that's not what I consider a large loss. I use stops so that I don't have large losses. If you take a trade and you lose 2 to 3 times the amount you normally risk, that means you have to take 3 more trades just to break even and you're still not up. That's the point of using stops and putting in the stop. And I get that people don't want to use stops, but you basically have no way to even, how could you even, do stats like mine? You couldn't even stat yourself. You'd be like, oh my God, I have no idea if I'm doing good or bad. Because you'd be blowing out in every trade that didn't lose, and then every trade that worked, you're probably chipping away just to get out with something because you're so happy that you're up anything. You have to use a set risk for every single trade that you take and stay within that risk. So there should be no large losses. If I lose in an option, I bust out of it. I'm not losing 20 grand in one trade. I risk what I risk, that's it. The people try to double down and do all kinds of crazy things. That's a disaster. If I give something more room, there's a reason for it, it's based on the chart, and then that's it, you gotta cut it. Will I take a second trade after I get stopped? Yes, but I'm not gonna take a stop, and keep trading all day till I blow up my account. No, and you can tell that from the stats, I don't do that. But I will take a second trade. It might be in the same thing. I could have retaken Tesla. I should have gotten back into this stupid thing. It was just bothering me. I was in the option and I let it rock. But I could have gotten back in this. But I didn't take a large loss. No, I took a loss. And again, this is not an exact science. If you're risking 3,000, you lose 3,500 or 3,800, that's not the end of the world. If you're risking 3,000 and you're losing 7, that's you have no risk then. You have no risk parameters. You're crazy. You're all over the place. And people are like that. Don't do it. Don't do it. Because again, that's how people burn themselves up. That's how people burn. You're burning through your account. Do you know what I'm saying, people? Let me see. Someone's asking a question.
Melissa, we do have a couple questions in YouTube I can share over with you.
Go ahead.
Lorraine wants to know, for options, do you only play those for the weekend?
I don't know what you mean by the weekend. I do the Friday expiration. So if I do a trade on Monday, it expires a Friday or the following Friday. If you're asking if I hold trades over the weekend, not all the time. No. Do I kill it before the weekend? No. If I could be in a trade that's down that I did on a Thursday and I'll hold it through the weekend down, if that's what you mean.
I think there was enough answers that it'll cover. Lorraine, if you still have questions, let us know. But because I didn't understand it either, I thought you might. Enzo in chat wants to know, are you playing the gap after it occurs or anticipating the gap will occur based on your checklist?
Well, I will tell you that I'm playing the gap when I see the gap. However, because I can't predict the gap. However, some of the trades that we did in the last 2 weeks, we were in them and then they continued. So they ended up being monster trades because they did another gap. Do you follow what I'm saying? So that can happen, and that's amazing when that happened. And we actually got that. We actually had that in IBM. We had that in IBM here, which was the reason this was so nice going back. Where was this one here? Where was that IBM? So no, I don't know the gap's going to happen, but I'm playing it. Where the heck was that IBM? This continued. We were in it here. Did I know this was going to do this? No. Did I do the trade here? No. We did the trade here. And then it kept going. So that happens. Does that make sense?
Yeah. Lorraine asks, are you, so I think she clarifies that, do you hold over the weekend? Do you hold from Friday to Monday?
Sometimes,
you don't necessarily think just because it's Friday, but.
I will hold over the weekend if I'm completely down in the trade. Like, I'm not going to kill the trade. It doesn't expire for another week. There's no reason to kill it. And if you're saying, am I worried about the weekend? Like something could flip or happen on a weekend crazy that nobody knows about overseas or something. That doesn't happen all the time. That doesn't happen all the time. You shouldn't be scared to hold a trade over the weekend. But like, for example, if you're so far in the money, okay, on a Friday, and you're like, I want to book it. This is great. I don't want this to reverse against me Monday. Well, that's fine. Just get out of it. Book it. Again, this is where I'm active. You see, look at all the trades this whole year. Like, chunk it out. Do 2 contracts. Get out of one on Friday. If you think it's still going to get going, hold one over the weekend. Again, so, I mean, you should be booking money on a consistent basis is the point.
Ricky says you are, even though you speak fast, you articulate well, and I've been able to follow everything.
Oh, perfect, Ricky. Thank you. Thank you very much.
All right. Let's see. That's all the YouTube questions. How long do you hold your trades? Lana wants to know. Is it a day trade or is it a swing trade? How many days out for expiration?
The day trades, I am in and out in several minutes. I mean, I could be in and out of a trade in like 5-10 minutes. We were in and out of BA this morning very quickly. Before 10 a.m., we were out. If you're talking about the options, it depends if the trade goes or not. So, for example, again, if I take a trade today, I'm not going to get out of it today if it didn't go yet. Again, I want the momentum move. Ideally, the trade should go in 24 to 48 hours, but that's not always the case. So yes, I will hold trades overnight, and you shouldn't be afraid to do that. The biggest, let's just say this really quickly before I finish up. The biggest benefit of doing options is holding overnight. I talked about this in the room in the morning, and people say it's because you don't need a margin account, and you don't need 25,000, and you can trade stocks in the market, which is crazy expensive now to do a margin. That's not the benefit. That's a side benefit. Once you start making money and you have 50 grand in your account, you're not going to give a crap about that, and you should be doing the margin trades with me anyways because they go faster. The fact is that the benefit of doing options has and always will be to capture overnight moves in stocks with a fixed risk. If you were short Tesla when we were long it and you were in puts, and you know what, some people were. They thought Trump was going to lose and Musk was going to go bust and everything else. If you were just short, short in a swing trade or just short the stock, you have an unlimited risk with where it went. Look where the heck it went, okay? If you have a put in something and it goes up against you and you risk $1,000, that is all you're going to lose. You have a fixed risk and can benefit from capturing larger moves by holding overnight. And that is the true benefit of doing options. And I have to start lecturing about that more. People are scared to hold and they don't want to do it. And they think it's because you can do it in a cash account with less than 25,000. But that's just your financial situation at the time that you don't have the money to set it up that way. The fact is, I think everyone should be doing margin trades because they happen quickly and we can get the move. And if I short BA and I get $1 out of it, and I make 2-3 grand, I wouldn't have that same thing in an option in 5 minutes. So there's definitely benefits to doing margin trades, but everybody wants to do options lately, it seems, because they can open up an account with 5 grand or 3 grand or $10,000 and they don't have the margin account and they don't want to go prop. But the benefit is holding overnight. That is how we made all the money that we made in Tesla. And if you don't want to hold it overnight, you are going to miss these types of moves. These types of moves, the people that got these moves, that did the trades, that held them, that even just took the trade at all and just got up the next morning after the election, those people have made their whole year, basically. And if you didn't do the trade and you didn't want to hold it, or you were scared to hold it after 4 o'clock, you didn't get it. You missed it. And I can guarantee you some people did miss it and they kicked themselves in the butt. The class is $69.99. We didn't get to that, whoever asked that, but we will get to that shortly. It's $7 grand for the class. Anyways, it's about, go ahead. What were we going to say?
2 more questions.
Sure.
And then I think they're pretty quick. Enzo wants to know, is it correct to assume your option contracts are typically short-term?
Yes, a week is short-term.
And then Lionel wanted to know, do you ever trade stocks or is it always just options?
Yes, that's what when I'm talking about margin trades. Those are when I say a margin trade, that's I'm shorting the stock if it's BA and we're shorting it at 147 and we take 1,000 shares of BA short, you've got to have 147,000 in buying power to take that BA. Divided by 10, you need 14.7 in a prop account, or divided by 4 in like a Schwab account. You have to have a margin account. That's what I was talking about margin trades. So yes, I'm doing BA today was a short we did on margin. I called a put in it, but I called it later.
Right. We're caught up in the YouTube questions. I'll let you take it from here.
Anyways, it's about working smarter, not harder. And again, it doesn't matter if you do day trades or options. It's the idea of trying to get in, look at the direction, take it, and do less trades. Less trades means you'll have less losses and hopefully then more wins, okay? And then bigger profits at the end. So why is shorting the way to go? Why do I prefer to short? Just because of the speed. The speed that stocks fall faster than they rally. And while we capitalize on the move in the market and some of the stocks in the last week by going long and doing calls, the fact is that I will short. Again, we've had some huge shorts like IBM and AMD, but it's the panic that comes into stocks and it happens really fast. And again, number 3, and we've been talking about this the whole time, become an expert in one thing. It's about focusing on one thing. For me, it's gaps. It will help you to be consistent with your trading, and ultimately you want to be successful. So I focus on the gap. I get up in the morning and I rate the gap. I've been doing this now for so long. And again, when I started it, I didn't have all the points, but that is what you'll learn from me in the class. That's how you know what stock to trade every day and where the power money is going. I'm not predicting the outcome of the election, or what's going to happen to Tesla after the election, because I don't know the outcome of the election. I'm reading the power of money that's happening. Okay, same thing with Bitcoin. Bitcoin's going to 100,000. I don't know if it got there today. I don't trade Bitcoin. I have no interest in trading Bitcoin. I think that is very risky, but that's where it's going. I can't tell you the exact date and time it's going there. But again, I'm good at reading price. And so that's how I can read something like that and say, this is where this is going to go. Tesla's going to 400. There, I told you. I just gave you a trade right now. But I don't know when. It's like, so, I mean, once you get good at reading the power, you can take longer term trades. You can do options for longer out, which are called leaps. Okay, you're going to pay more for those trades. You can do swing trades, but again, you don't have the fixed cost of the option. And again, I knew the SPY was going to go to 600. That did that yesterday. Once you get good at reading price, you can go long, you can go short, you can do swing trades, you can read the gap and do long-term trades, you can do short-term trades, you can do options, you can do it all, okay? But if you don't understand what's happening, you will short Tesla, and you will do it for a gap fill, and you'll lose, and then you will not understand why it didn't work. Because again, that was a bad trade if you did it. Even if you made, 30 cents, it was a bad trade. You have to be on the side of power, okay? And it's just so easy to read and identify. So I find gaps and rate them using a checklist. Gaps have to be qualified, and the checklist tells you what to look for in the price of the stock. And again, we've been talking about this the whole time. I mean, people complain about institutions and, machines in the market and algorithms. Actually, they move the market. They move stocks. We'd never be able to make the money that we have the potential to make without them, okay? That's what creates the gaps that we're trading on, we're doing, okay? And again, this was one of the ones that we did that was a short. It was a nice short, and it was kind of like a bleeder. Again, I do prefer to short, but I'll go long. We've been doing it. I have to do the best thing. I want to do the biggest thing. We want to get the big trades. I'm looking for anything that can get me money in the position, and it's like finding a gold when we find it. And again, moves like Tesla, we don't get that every day, but I absolutely know when I see it, when we're going to get it, and we absolutely hit it, and we hit it aggressively, and we capitalize it when we get it. I'm just going to continue here just to get down to the information about the class really quickly, and anybody can ask me any last minute questions. So if you want to come and learn, the class is actually this weekend, the 16th and 17th for November. You will learn a high probability of directional bias for the entire day, big move in the day, early confirmation of the move, precise entries with follow through. We didn't talk about that today, but day 1 is the points. Day 2 is the entries, and then we talk about the exits. But I do call them in the room. And again, earnings season is now. So we had the earnings season, then we had the election. Is it all downhill from here? Nothing to do between now and the holidays? No. We're going to have a lot of moves. We're going to have a lot of shorts. We're going to have a lot of longs. Things are going to happen in the market. You saw that even in the last 2 days. But the fact is that we're still in earnings season, and we still are having earnings. Now, this is actually me. I did a class in New York. I did a live class in September. It was the first live class I ever did. I do not have any future live classes planned. This is more expensive than my online class, but I met people. It was a great experience for people. I did it in New York. They came. It was 3 days, and I support people. I mean, people can call me. They can ask me questions. They can email me. And again, I think it's really, really just important for people to realize that they can do it. Okay, you can do it. If you're not making money, you're not in a good program, or you don't have help, or you have a strategy that doesn't work. Again, this is real. You can do it. It's just a lot of people, like I said, once they're trading for a long time and losing money, they feel so down and out about moving forward to the next thing. If they've taken umpteen classes and didn't make any money or lost, it's just so hard for them to plunk the money down and keep going. But you have to, because then you're never going to make it. And then everything you did before was meaningless. The most important thing is that you make it. The most important thing is that your dream of becoming a successful trader actually comes to pass, and you realize that dream, and you're doing it, and it doesn't have to take that long. But there's an investment, there's time. Obviously, the class is all day Saturday and all day Sunday. It's 9 a.m. to 5 p.m. Eastern time. It'll be your weekend. So again, what are you going to learn in the class? You're going to learn the checklist, and it's about empowering yourself to do it. So the Golden Gap course is a complete system to use to trade. All the pieces of the puzzle if you want to do it. Again, the class is a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online. You can be anywhere in the world and take it. It's 16th and 17th this weekend, and then one more class this year in December. The class tuition is $69.99. Email me for the forms if you're interested in signing up. And I'm doing an autumn special. I took this picture. That doesn't even look real. Looks like a postcard, like a professional picture. I took that picture. That was a couple weeks ago. We're doing an autumn special that was Central Park. If you sign up by Friday, you get the trading room free for 1 year and the newsletter free for 1 year. So it's a nice deal. You get all my trades free for 1 year. You can start trading with us tomorrow. And again, tuition price is $69.99. Everyone pays the same. I'm doing a bundle. You will get the room free for a year and the newsletter if you want to do it. The bundle is 3 classes for $89.99. You get the options course, the trends course, and the Golden Gap. This is all of the next 2 weeks of classes if you want to sign up for this. And again, you can get the autumn special for this too. Any questions? I have made it on time for the next presenter. Any last minute questions?
I don't have any more in the YouTube.
Okay. Listen, email me at melissa@thestockswoosh.com if you have any questions. So nice seeing you again, Jeff. I don't know if I'll see you before the holidays, but I probably won't before Thanksgiving. So
well, it's great to have you in here. Thanks for coming.
Happy Thanksgiving to you and your family.
Thank you. You too.